I was looking up synonyms for pivot because I want something less than a pivot, and I found oscillate. It could be a Fed oscillation, or what about a swivel? A swivel's not as far as a pivot. Did you glean anything from Friday that was more positive than Thursday in terms of whether the Fed goes 75 twice, maybe they go 75, 50, then take a step back and get more data dependent? You take any solace from that report that came out on Friday that's moved us 1,000 points?
Well, I'm going to be stubborn on the definition of pivot. To me, pivot means that we reverse course or we change direction. So if anybody's expecting a pause or maybe a downshift in the level of hikes, I still don't call that a pivot. What I took from last week is that it's now, the thing that matters now is the path. So the terminal rate really hasn't changed. We're still looking at 4.8, between 4.8 and 4.9%, somewhere between March and May of next year. But the path to get there is what matters to the market right now. And I still think that this rally, although it's been attractive and everybody loves to take part in a rally, I still think it's pretty fragile. However, it could last a while because we've got, as everybody knows, seasonal tailwinds behind us. Usually the market likes it when we get past a midterm election. We've got GDP coming this week that's expected to be back in positive territory. And so far, earnings season has not been that bad. But what I would look at in 2023 is that to get to that terminal rate and to really still take care of inflation, I don't think the Fed stops hiking anytime soon. I think they just hike maybe at a slower pace.
Well, that might be something. I'm trying to visualize what an actual pivot is. See, I can swivel in my chair, and you can see that I can kind of swivel a little. Doesn't mean that the pivot is all the way around, I think, right? So can't we change it to a pet? Can we call it a swivel?
Look,
maybe they're going to do a Fed swivel.
I grew up with a dad who was a basketball coach for 36 years. I've been to a lot of camps. When you pivot,
reverse.
You move directions. It doesn't mean 180 degrees. It could be just 45 degrees. It could be 90 degrees.
Okay.
But you change directions, you go a different way.
Well, I'd like to just talk about the Fed, since there's such a big part of our life. That's all that matters in the entire universe is the Fed. But we do have earnings coming this week, Liz.
Yeah. Well, the Fed matters for sure. This week, I actually think earnings matter more. So when you look at the rally that we've seen recently, I think it's fragile, and earnings is something that could change it, could change the trajectory of it, could change the strength of it. Also, remember, we're looking at an earnings season where we're really only expecting about 3 to 4% growth. And if you take energy out of this earnings season, growth is negative. And we're at a point now where earnings have been revised down, maybe not as much as everybody thought, but revised down for 2023, that we don't have a ton of year-over-year growth looking forward either. So looking at earnings season this week, I think we're going to get a lot of information about 2023. We're going to get a lot more guidance. And the other thing that I would tell investors is that we're in a time where sales growth is outpacing earnings growth, and that is abnormal. The reason that's been happening largely is because of inflation. So as inflation comes down, the margin and the buffer that we have from that top line also comes down. So although we haven't seen downward revisions in a big way so far, it could just be that we haven't seen them yet.
Do you think the labor market is loosening up at all, Liz, or is it going to continue to be stubborn?
I think the labor market is the absolute last thing to crack, and I would expect to see some weakness towards the end of the year. It was a big shift downward in August, the amount of jobs open. So now we're looking at a ratio of about 1.7 jobs to every unemployed worker. If we get that back down to pre-pandemic levels, which was about 1.2 jobs for every unemployed worker, that's where things get a little bit iffier, because if you get below that level, that's when you start to see unemployment tick up. So I would expect weakness in the labor market to start emerging towards the end of the year, and that's when the Fed has to decide whether or not they really want to slow down or do a big pause.
Big swivel. All right, Liz, thanks. Good to have you on.
All I'm hearing in my head is Abby Norman.